lower costs and interest rates. They also come with less closing costs, usually little to no origination fees. So what are the cons, you're asking? Welcome back to Confident Real Estate. I'm your host, JC. When it comes to financing your next real estate investment, there are plenty of options out there. There's the traditional mortgage approach. You can go and get a hard money loan from a hard money lender. You can get an investment property loan from some of the portfolio lenders that are out there that specialize in underwriting investment properties. And of course, you could get the traditional home equity line of credit, also known as a HELOC, if you have an existing asset property that you can borrow against. In the past few years, some other options have arisen to the surface, such as crowdfunding and peer-to-peer lending. And while we've probably all heard of them, how much do we really know about what they are? Especially peer-to-peer lending, and how realistic is it for you to use as a way to expand your real estate portfolio? Let's find out. For most investors, the idea of peer-to-peer lending, also known as P2P lending, is intriguing. Essentially, it's a way to connect investors with surplus cash who don't want the headache of buying, leasing, and managing a property day to day on their own, with people who do want to get their hands dirty doing exactly that. From the investor's perspective, if you're an investor with maybe less than picture-perfect credit or some, shall we call them, red tape issues that traditional institutional lenders may frown upon, peer-to-peer lending is an excellent option. And even if you have amazing credit and are a bank's dream, peer-to-peer lending might have a lot to offer you as well. As with any method of financing, there are always drawbacks, so you have to evaluate the pros against the cons whenever money or any type of investment is involved, which should be obvious at this point. Peer-to-peer lending is done through peer-to-peer lending platforms that connect borrowers with vetted private investors. The investors make the loan to the borrower through the platform, so technically the borrower and the lender never actually meet or talk. The peer-to-peer lending platform services the loan throughout its entire duration, and they take their fees out of the earned interest before turning over the remainder of that earned interest to the private investor who is the lender on the loan. The beauty of this is because it is a personal loan, there is no mortgage collateralized against the property and recorded against the property. So what are the overall pros of peer-to-peer lending? Well, they do have many advantages. They are not typical bank loans, so therefore, because there is no traditional mortgage process involved, they are not subject to traditional banking and federal regulations. They're also much easier to get. They require less qualification standards, and their application process is usually pretty streamlined. You can see offers from lenders within a few days, if not hours. They also come with lower costs and interest rates because they don't have the bank overhead that many of the institutional lenders have. They also come with less closing costs and usually little to no origination fees. So what are the cons, you're asking? The biggest downside with peer-to-peer loans is that they are personal loans, so you have to make sure you accurately crunch your numbers. You don't want to jeopardize your financial security and your credit, obviously. They also come with a larger requirement for equity contribution on your part as the borrower, which means you have to come up with more money for the down payment than you would if you were getting a traditional mortgage. If you're getting a residential mortgage, typically you're putting 20 to 25% down, even on an investment property. Here, even though this is not a mortgage against the property, peer-to-peer lending typically offers lower loan-to-value ratios, meaning around 65% of the loan-to-value ratio is the average a peer-to-peer lending platform will give you. So that means you have to come up with 35% of the down payment on your own, or otherwise get a co-investor to come in with you. Now, we cover some of those issues about co-investors in some of your question and answer videos that we're about to post, or maybe we already posted before this video. I'm kind of losing track of the sequential order of videos. Apologies for that. But if you hit the like button on this video, and then you also hit that red button next to it that says subscribe, you'll be sure not to miss that future content as it's released, where we answer those questions about co-investors and mortgage lending. If you are borrowing money for the property as a personal loan, it is not going to be possible to go and get a traditional mortgage to also meet that gap between your down payment and what you're getting from the peer-to-peer lending site, because mortgage lenders in the institutional setting are going to require that you have the cash as your own personal funds and not additional borrowed funds from some other source. Again, all covered in a totally different video. Check the videos below, click subscribe. There are other videos coming out. Several of you have asked about it, and they are coming out in our question and answer videos that we are starting to release. So, those are the typical downsides of peer-to-peer lending. So what's the bottom line? Like I said at the top of the video, as with any form of investing, there are inherent risks, and peer-to-peer lending is no different. Carefully calculate and crunch your numbers, make sure you don't borrow more than you need to, and make sure you have the long-term ability to repay that debt. Your credit will thank you for it, and ultimately the size of your portfolio may depend upon it. Be disciplined. Because again, like I love to say, discipline will never lead you to failure, the same way excuses will never lead you to, say it with me, success. Hope you found this valuable. Thank you once again for tuning in. Don't forget to hit like, hit subscribe, and we'll see you next time. Take care.